Good morning, everybody. We have a lot to get to, so let's get to it. This was actually kind of difficult thinking of a subject this morning because there's so many things to go over. And 2 weeks ago, I was apologizing to all of you, saying, yes, the thing has been smashed down. We're not down as much as everybody else. Don't worry, it's going to come back. And sure enough, 2 weeks later, here we are, and we are back. The stock market's not back. The bond market's not back, but we are. So let's do a little bit of forensics here and then do a look ahead and think what's coming next. So, in the turmoil from the Trump announcement on tariffs, there were so many cross currents it didn't make any sense, at least with what we're used to. For example, if the Dow were down 5% when it was all crashing, the banking stocks were down 10 to 11%. Wait, banking stocks down double what the normal stock market's down? What's that saying about the financial system? We had oil going down, but not as much as other investments. But then when gold rallied, normally oil goes with it, but oil didn't. Normally, when a stock market is cratering, you would expect the dollar to get stronger and the bond market to do really well because people leave stocks to go to the safety of bonds or the safety of the dollar. None of that happened. We saw the dollar going down and bonds going down. So, what do we make of this? A couple of things. One, we are learning bonds are no longer a safe haven. The dollar is no longer a safe haven. But the rally in gold to go from 3,200 to 2950, 2980, back up to 33 and hit an all time high, it's telling you where the flow went. Flow was moving to gold first. Now, what's happened kind of since? What happened on Thursday? We watched oil doing a nice recovery, copper doing a nice recovery, hard assets going up. And now we have the situation where all 12 categories of the stock market are underperforming versus hard assets. Let me explain this a little better. We always say the stock market. You kind of break the stock market down into 12 broad groups. There are utility companies. All right, that's one group. You've got consumer discretionary. That's another. The communications or tech sectors. All right, you get the idea. Anyway, banking, finance, 12 sectors. All 12 are now underperforming versus natural resources, commodities, metals. It's telling you about the flow. It's going this way. So why? Let's go back to 2 weeks ago again. Remember we talked about that Stephen Mirren booklet called The User's Guide to Global Financial or Global Trade Restructuring. And we said, it looks like the Trump administration is following this guidebook. It's only 38 pages. And so remember, step one was tariffs. We got to do the tariffs. We work our deals. We work the contracts. And I don't know if I mentioned this back then. This is going to be a little long this morning, but hang with me. This is starting to look a little bit like a bankruptcy workout. All right, let me explain. If you're a company in bankruptcy, what's the very first thing you would do? You would try to renegotiate your contracts with your suppliers, with the banks, with your customers. Step number one, what can you do? Isn't that what tariffs are? Trump is renegotiating the contracts. What would step number two be in a bankruptcy? Every bankruptcy, you've got liabilities. All right. You'd want to minimize those liabilities, make them as small as possible. All right. For government, what are our liabilities? 37 trillion of debt is a pretty big liability. And we all know we're kind of hitting the debt wall. We won't go into all that again. But how would a government minimize its debt liabilities? It's in the guidebook, the user's guide. A core tenet of this, remember, is to devalue the currency. And what do you hear Trump talking about? We want a weaker dollar. We had the Treasury Secretary, Scott Bessent, in Argentina, of all places, talking about if the Fed wouldn't intervene, the Treasury Department would to provide, quote unquote, liquidity to the markets. Translation: how do you print money and get the money out to the people? Because if you print a bunch of money and put it in a safe, it doesn't do any good. You got to get the money moving, circulating. Well, if the way the Fed does it is the Fed prints up the money, ships it out to the banks, they drop interest rates, and encourage you all to borrow. So then you borrow and you build businesses or buy cars or whatever, just stimulate the economy. But remember, if you're doing this, it's also spraying and praying a whole bunch of money across the country, which leads to inflation and a weaker currency. That's one way to do it. Second way to do it is the Treasury can do it themselves. How do they do that? The way they did during COVID. They didn't go through banks. They just sent everybody checks. Here's 10 grand, here's 5 grand, go spend it. All right. But what did the Ford dealership do as soon as they found out everybody got a $10,000 check? They raised the price of the Ford F-150 by 10 grand because they knew you had it. Thus, they create the inflation and devalue the currency. The third way to do it is you just announce it. At the close of the market on Friday, they will announce that the currency's been devalued 30%. That's what they do in Venezuela or Zimbabwe, this kind of thing. This is one of the core tenets of this user's guide to rebalancing trade. It's not just that they want to rebalance the trade, but they need to get rid of the debt. So back to our bankruptcy analogy. Also in a bankruptcy with a company, every company has assets, even if you're in bankruptcy. You might have a fleet of trucks. You might own your building. I don't know. Maybe you've got machinery, machine parts. You've got something. You would want to make those as valuable as possible. What does government have that's the big asset on the books? Well, you could say student loan debt, and actually it is a big asset. We won't go into that. But government owns land, lots of it. And not just land, they own the mineral rights, all those natural resources, the water rights. They would want that valued as high as possible. You see what the pattern is here? Not only does Trump want to lower the dollar so that our products are less expensive overseas, but he wants to pay down the debt with inflated, I hate to say it like this, but monopoly money-esque currency, pay down the debt. And when you do that, the value of your hard assets goes up. And that's exactly where you're invested. You're in hard assets. You're on the side of the government here. And what are we seeing? This rotation from papery assets over to the hard asset side. I think this is probably going to play out over the next 8 to 12 months. We'll see how quickly this gets done. But I believe you are in the right things. I said this 2 weeks ago, and thank you for sticking with us. We'll see how it plays out from here. Again, if the facts change, we'll adapt. But as it stands right now, be right, sit tight. I think this could be very profitable for all of us. And with that, I'll turn it over to Walt.